Well, good evening, everyone. Welcome back to the channel. So here we are at 11 o'clock on a Sunday, and we got a few comments here already, which are actually very good. So let's see. Oh, we got 19 of you on. Wanted to see that number pop up first. So for the video tonight, I was just going to tell you all that the JPMorgan fund is actually going to debut this week for YieldMax. So that's all I was going to say. So thanks everybody for tuning in. That's it. I'm just kidding. I've got more to say than that, of course. Anyway, I had this comment come in first. And then, all right, let's read these off because these will help the progression of the video here. So JP Morgan currently has a PE of 9.03x, a yield of 2.78%. I actually happen to know the yield because I have stock in JP Morgan, and a long-term EPS growth estimate of -4%. Well, that's a bit discouraging. With negative EPS growth, I wouldn't recommend touching anything tied to JP Morgan, including JPMO. That's disappointing. You know, JP Morgan always has had such great earnings and stuff like that. Um, I guess I can say this because it's in the past, but I actually used to work there. So that's why I have stock. And it was nice. It was like $1 a share per quarter. So at one point, it was like a perfect 4% dividend. But I think the stock has actually gone up so much that it's like 2.78% now, which doesn't surprise me. Because if I'm not mistaken, the stock is it was back over 150, which foolishly a year ago I got covered calls on it at like 120 strike price. So those are way out of the money, and I haven't rolled them yet. I was waiting for it to maybe fall back, but it's probably not going to happen. So JP Morgan stock is at 143.83 right now. The yield is 2.78%. The beta is at 1.10%. The EPS, earnings per share, is at 15.55. And I'm showing here a PE of 9.25%. But that's only because of all the cutting edge research and pre-prep that I did for the video, including just looking on my phone here for like 20 seconds. I know I almost sounded prepped, didn't I? But anyway, so we bottomed out in the stock like March 24th. We were at like 124.91. Probably should have rolled my options then. Of course, the premium's way higher now. We hit 157 in July. Don't we miss July now? The market looked like it was going to really recover in July. So did it for all of our YieldMax funds too. Like for TSLY, we were at like an all-time high in July. Those were the days, just what, 2 months ago or a month and a half ago. Anyway, yeah, it's a $4 yield per year because it's what I liked about it was basically $1 per quarter per share. So I was getting like a $400 fat dividend per quarter. So do the math on that. I did accumulate some shares while I was there. So I do know this is a company I do know a thing or two about. Projected dividend growth rate of 4.64%, assuming they can maintain that growth for 20 years and a 9% discount rate. A discounted cash flow calculator comes in. Oh, I like this. Some DCF analysis here. I didn't even have to do it myself. It's great. By the way, I know it's short notice, but do you want to hop on the live stream? I know we talked about it. We probably have to pre-prep though, but I'm just, I just happen to think about it. Discounted cash flow comes in $73 a share. So it's almost double valued. That's pretty scary based on the DCF. It's currently trading at 143.83, has a negative value for long-term EPS growth. And from purely a cash flow perspective, it's only worth about half. Yeah, that's what you just said. That's pretty scary. Oh, look who it is. I haven't seen you in months, it seems like. Anybody invest into leverage ETFs like Boyle? I think you've talked about that one before, but let's see if the performance on it is boiling. It's not. The losses, well, it's boiling away. Let's put it that way. It's like evaporating like water. This is what I see. So, ooh, that looks terrible. From year over year, 96.48% down. That looks pretty bad. What are you seeing with that? You'll have to let me know. Unless you shorted it. I hope you shorted it. Leveraged ETFs experience long-term NAV erosion. If cost to borrow is low enough, it is better to be short KOLD than long boil. Let me look up KOLD. So I think that my phone is going to be my screen tonight. This one is ProShares Ultra Short Bloomberg Natural Gas. Let me follow this one. Since you mentioned it, I trust you, so I'll follow. I'll add this one to my list. I probably got 1,000 of them on here now. This one is up 85% this year, so pretty good find just looking on the surface here. We peaked in June, actually 90.48. We've dropped $30 since then, so I don't know. This might be a buy-in point. Beta though is a negative 4.92%. I've never seen that before. Negative 4.92%. I've never seen a negative beta. That's interesting. Anyway, cold is a short on natural gas. Is that why they call it cold? Is that it's like a play on, not a play on words, but a play on tickers there? I don't use margin. I made money when Boyle finally revived, but I'm not willing to ride it down again all the way to $3. That's pretty scary. I think I did that with a company in the energy sector. So for those of you that don't know, I really don't touch energy anymore, and I would only ever touch it through an indexed fund. I would never buy individual stocks because the only two stocks I ever had go bankrupt that I rode all the way down happened to be energy stocks. So I don't think I'll be doing that again. Yes, I'm telling you that you want to go long Boyle. It is better to short cold. Go look up Boyle's 10 year. Oh, I should look longer than a year, shouldn't I? I should look at 10 years. Well, wait a minute. Since 2013, we're down like 99.97%. Since 2014. That's unless are we talking about the same fund here? I presume we are, but that's what my data tells me. Yes, they're both abysmal, but I just use them for swing trading and investing profits. Okay. Interesting. I'm long on all commodities. I think inflation will drive them up soon. Well, they kind of have. I mean, there's a lot better ways to capture the run up in energy prices. I mean, you see gas prices from like, late 2020 to now have doubled and tripled in some places. For swing trades, they're great, but you used the term invest, so I thought you meant long-term holds. Yeah, you got to be careful with the engineer. You got to be careful with your wording there. Shorting both Boyle and cold as pair trades also looks like it may be attractive. Interesting. I probably wouldn't touch that. Oh, perfect. See, that's why I was waiting until you joined until I started. That's why I was like a couple minutes after because I was waiting for you. So welcome to all of you. Yeah, it's kind of funny, isn't it? Yeah, let's go. I'm not at my usual house. I'm at one of my houses, and I happen to have the house to myself. So nice and quiet, but I got to do more work. I'm so far behind on my work. It's crazy. It's been a crazy week. Who knows? I may become a full-time YouTuber before I want to. So let's see. Won't be buying this. Ah, you did show up. Harvest volatility, yeah. Yeah, but it looks like there's no upside with that one. Looks like fan is attached to your head. It's funny because I have one fan, no pun intended, that keeps saying I need to get the hat with the spinning fan. So that's kind of why it's a perfect backdrop because I'm not wearing a hat, but I got the spinning head. See, you know me. I a little bit on purpose there. Helicopter man, that's funny. Yeah, I'm kind of house sitting actually. But yeah, I definitely would use a virtual background, but for some reason it smokes up my bandwidth on my fancy MacBook, which that shouldn't happen with. Oh, look here. You do want to join, huh? All right, let's see. Have a good memory, great memory. You're talking about me, right? I do have a great memory. Cold is actually performing nicely. Let me do this. If somebody's going to join here, I'll just post the link publicly. Here we go. Performing nicely, huh? So they should name it hot. Don't think you can short cold. Engineer assumes people in this room have the patience and knowledge to short a stock correctly. Yeah, it could be dangerous. I feel like to really execute all these trades, I'd have to just do this full time and then YouTube about it. That would kind of be my dream, but sit at home and day trade and then YouTube about it, maybe 6 or 7 times a day, like Meet Kevin does. Who is this? Miles World. Hello. Are you planning to get together with Khmer? He mentioned you, and I took it as you guys are communicating. We did, but there was some drama in the Discord a week or so ago. I can't remember now, but I so here's how things work for me. So I'm a nice guy. I like to support all my fellow YouTubers, but I'm in no way in need of anyone to come on to boost my audience. Now I see other people using my Discord to poach subscribers from me. I'm not going to name any names, but um, I mean, here's the thing. Like I've had other channels on. Obviously, Andre's a fellow YouTuber. I've had a few others on. I had another one on who I was nice to, and then he went a little crazy on me, or on all of us, I guess. But um, I guess that I don't know what all um, may or may not have been said, but I guess I came across like, and I'm half joking. I say, "Hey, how about this? Come on my live stream. I'll come on yours," which I have no problem doing. But I'm in no way like desperate to have another channel on. I'm happy to help them, but it's not like a 15,000 subscriber channel. Say, it's not like I'm oh, let me get them on so that I can get their audience or something. It's nothing like that. Anyway, well, guess what? You all are in for a surprise treat here. We got a special guest on here. So I'm going to have him join right now. We get to put a name to a face or a face to a name. So let's do this here. Let me just check. Hold on a second here. I'm not going to tell you all who it is, but we will go ahead and do this.
Hello.
All right. Finally putting a face to a name here.
Can you hear me?
You got sound and stuff?
I can definitely hear you. Can you hear me?
Yes.
Perfect.
Awesome. So finally get to put a face to a name.
So how's Florida treating you?
Oh, it's fun as usual. It's cooling off finally.
Yeah.
Yeah.
Sorry,
And
I'm trying to turn
you?
on it. I'm in Ohio.
Oh, okay. Are you around like Ohio State?
So no, I'm in southeastern Ohio. I'm in the
Okay.
Marietta area. So I'm like right on the border with West Virginia. I live pretty
Oh,
close to the Ohio River.
okay.
It is hot and muggy here. It rarely
Really?
gets above 80, but all summer long it's like 81 and 100% humidity.
I think it's hotter in Florida, just humidity wise.
Probably, probably. I'm going to try to get another one of my TVs on so I don't have to keep looking off to my left to make eye contact with you.
Okay. Hoffman's actually coaching you up here. He's saying move the mic up.
I don't know how to move my mic, but I can try.
I'm using a MacBook, and the mic is through the MacBook.
Let me try turning up my speakers. Is that helping
Okay.
at all? Did that help at all?
I hear you fine. So I see your disclaimer here. You think I should use that too?
Well, so I'm protected by my EIT certification as long as I'm
Oh,
super clear with everyone that I have an
yeah.
EIT certification and not anything else.
Yeah.
It's really weird how the engineering code of ethics works. I'm allowed to do a huge number of things that you can only do with other certifications.
Mm-hmm.
But as long as I'm clear that I'm an engineer and I'm not like a CFA or a CMT, although I can go take those tests, I have definitely thought about it.
Mm-hmm. Nice. Yeah. Oh, someone commented who I haven't seen in a while. What did he say? Any interest in the ARM IPO? It's expected on 9/13 with a price range of 47 to 51. Don't know anything about it.
I can look it up.
Yeah. So this person, I actually met up with him when I was out in California.
Oh, nice.
The first fan of the channel that we actually got to meet up.
Yeah, if you're ever driving through Ohio, I'll meet you at a restaurant or something.
Yeah, for sure. I was in Ohio actually. So I just disclosed. We were talking about JPMorgan stock. I did actually used to work there, um, and I got sent to Ohio for training once.
Oh yeah. So
Yeah.
you've experienced our weather that changes on a drop of a hat.
Yes, that you get all 4 seasons at once, right?
Sometimes even in the same day.
Yeah.
Uh,
So they have a big presence in Columbus. They have a big office there.
I've been to Columbus many times. It's an advantageous city to live in because it's really easy to drive around.
Yeah.
It has really low traffic. There's not a whole lot of crime depending on where you're at.
Hmm.
But you can live pretty much anywhere in Columbus and get to the other side of it in like 45 minutes.
Yeah, I couldn't believe, like, once you get outside of it, I couldn't believe how rural it is.
Oh yeah, it
Like
goes straight to
cornfields
cornfields.
and stuff.
Yeah.
Yeah, because a group of us went up to like Cedar Point,
Oh yeah, the roller
and
coasters up there.
yeah, that was fun. But yeah, we drove through a lot of like rural towns and stuff.
Okay, so let's talk about something besides Ohio because I feel like I'm going to lose audience members if I just keep
Yeah.
talking about roller coasters.
Yep. So if you all haven't figured out, this is the engineer who comments a lot. He obviously knows his stuff very well. He writes articles for Seeking Alpha, right?
Yeah, I
Yep.
started writing for them back in February when I realized I was already taking a lot of notes on these companies, and
Hmm.
they were willing to pay me if I could just put the notes in a coherent format and publish it.
Wow.
So, I mean, I was already doing hours of research, reading up on these, reading 10Ks and earnings reports and everything galore. And eventually, people were like, "Why don't you start writing for something else?" And I'm
Hmm.
like, "Okay." And it was rough at the beginning because they really wanted me to adhere to their specific format, and they wouldn't let me use all of my favorite words like dumpster fire, debt spiral. You know, they're like, "No, we can't let you use that. That's way too slanted, unprofessional."
Interesting.
Yeah.
It's funny, until I started writing this book that I'm trying to get out, I've never like written a lot about finance. You know, like I do write, but like not about finance until now.
Mhm.
Yeah.
What is the gist of the book about?
It's just going to be personal finance, like my
Okay,
tips
okay,
of like how I've gotten, you know, how I've been, how I've managed my finances and stuff like that.
right. So like microeconomics.
Yeah. Yeah.
The general gist that I tell to all of my engineering students is just to make sure that your income is always above your expenses, and if your income ever drops, you better hurry up and cut your expenses in a heartbeat. Like,
That's what people have a hard time with.
yeah,
I mean, for me, my basic tips, and I used to be a personal finance channel before I got into all this YieldMax stuff. The
mm,
YieldMax stuff's really the only thing that grew my audience, but I have like 5 things, like, yeah, like you said, income versus expenses. Increase your income where you can, cut your
yeah,
expenses as much as
yeah,
possible. Make as much money through different side hustles as you can, like
yeah,
credit card churning,
yeah.
checking account churning,
Multiple diverse
obviously,
income streams.
yeah, investing. I did a video like a year ago about side hustles.
Mhm.
Um, and yeah, obviously investing, like just making money through those means. Um, and then just being good managing the money. Budgeting is important, no matter how much someone makes. Like I tell people all the
Absolutely.
time, you need to
Ab-
know where it goes. Like I can't stand, and no offense to anyone, I think we're all financially savvy people on this channel, but
mm.
I can't stand when someone is like, "Oh, I don't know what I," like, they just swipe their card and they have no idea what they spend, and then they're broke.
Yeah,
Yeah,
I keep a running tally of my debit card balance in my head within about a dollar.
really.
Yeah, I mean, there's no reason to keep track of the pennies, but every time I make a change, I just change the number and it
Well, I
stays.
always know what stuff costs. Like,
Yeah,
I love when a person says, if I ask them what, so they're like, "Oh, not enough to notice." I'm like, "What's not enough to notice?" You know?
every penny matters. Every penny.
Yeah, yeah,
One,
and I
one,
think it has to do with just how a person comes up. Like,
yeah, how you're raised and everything. Warren
yeah,
Buffett still makes his own coffee every morning because it saves him like a dollar.
yeah,
And he talks about, he's like, oh, I could go to Starbucks every day on my way to work, but I'd rather just save the dollar. He bought a Starbucks machine. There's like kitchen.
yeah.
And he priced out like the levelized cost of the machine over 20 years, and you know, all that because he's Warren Buffett.
Same thing I would do. I would buy the espresso machine instead of buying espresso every day,
Yeah, yeah,
because in the long term, it's going to be
yeah.
a lot cheaper to have
Even
that.
with maintenance.
Yep.
So
Oh,
I
they're
can't find
saying,
anything.
so I can hear you fine. I mean, it's a little muffled, but they're saying they can't
I
hear
can
you.
pull the camera closer. Let me go into my audio settings on this computer and see if
Okay.
I can find how to change the microphone.
Okay. Yeah, because I can hear you.
Well, the problem is that it's a microphone that's tied to the camera. So I have no clue how to use this camera.
Okay.
Can I just start shouting? Is that going to make Hoffman happier?
He's tough to please sometimes, but we got to keep him happy. He's helped me out a lot. So
Can you turn your volume down? Because if you can
you
turn
think that will
your
help?
microphone, yeah, if you can turn your microphone volume down, then everyone else can turn the volume up, and it'll be more levelized.
All right, I'm turning my audio down.
Yeah, I can turn my speakers up and down real easy. I have no clue how to change the volume on this.
I mean, I hear you fine.
So do you guys have any questions about how to hedge TSLY? Because I keep on repeating the same thing over and over again, and I'm just not
Go over
sure.
that for us, because actually, I'm gonna need to do more of that. I know there's a couple of ETFs. There's the inverse ETF, and then
Mhm.
you can do put options, which I
Is it
almost did, but
is it
the premium dropped in half like a day later on the ones I was looking at.
is it possible to share my screen, or can we only share your screen?
No, you can share yours. I do it with Andre all the time.
So let me pull up my discounted cash flow calculator. Or no. Let me pull up my hedging calculator,
Okay.
and then I'll share you what it does. And then I can explain how this hedging works. So that I
Yeah.
feel like half your audience just has no clue what I'm talking about when I get in the comments.
You're probably over some people's heads. I mean, you
But
know your stuff really well, and you're very like scientific the way you break it down, which I like.
I
Um,
was trained to be scientific.
yeah, but sometimes, I mean, I have to read what you say twice. Sometimes, you know. Yeah,
I have to read what I say twice. I'm a horrible speller,
really.
real bad. I mean, it's bad.
Well, you have more of a like a mathematical mind, right?
Yeah, I do, and I'm
Yeah,
not very good at writing in general. Like my handwriting is real slow and real tiny. So at a young age, they tried to force me to type.
really.
Yeah,
See, with me, like I have the numbers mind, but I was a good writer too, so I kind of didn't fit that category necessarily.
I was not a good writer as a child. I was forced to do that to myself as a teenager and then in my 20s.
My story, actually, which this will be in the book, but it's funny because I was actually bad at math until
Hmm.
I started applying it to money, and then
Oh, really?
it clicked. Once I like with calculus, once I started applying, like,
Mhm.
economic models and all that, it clicked.
So there's a special term for that. It's called germane cognitive load.
Yeah,
You probably have high germane cognitive load, which means that you're quick at understanding concepts, but you're bad at memorizing things.
yeah,
Yeah, I'm the same way. You hand me like lines of poetry and give me a week to memorize it, and on the seventh day, I'll just throw it on the ground and walk out. I can't do
yeah,
that.
yeah. Well, and it sounds like I think everyone does this, like, sometimes they blame the teacher, like, I did have some bad, like, math teachers in school,
Mhm.
and then I finally got a good one, like, my junior year of high school, and that helped me, and then that's when I started, like, really understanding money and stuff like that,
Yeah,
and
yeah.
that helped a lot.
Okay, so I'm ready to share my screen.
Yeah, go ahead.
I don't know how to. Oh, if I click on StreamYard, is the button at the bottom?
Yeah, there's a button, you should be able to add your
It says
screen.
present.
Yeah, do present, and then I can add
Share
it to
screen.
the live stream.
Okay. I'm gonna type share screen. Choose what to share. Oh, I can lock out. Can I lock out my desktop? And so I only share tabs and stuff. I would like to share Excel, but I'm not seeing it as an option.
You know what you have to do, because I this is why I don't share more spreadsheets on here myself. I had to do a
Mhm.
Google sheet. So if you can paste something into a Google sheet real quick,
Okay,
you can
okay.
share it. Yeah,
How about I paste it to the Discord or something? Is that something?
that works too.
Okay,
Okay,
let
so
me
here
just.
comes the screen.
I can paste a copy of this calculator to the Discord, and then I can also paste a clip of it if the copy doesn't
Okay.
work. Let me open the Discord. I'll post it to the chat. Okay, so the Excel file is in chat, and if you open that, you should be able to share the Excel file.
Yeah, I can just share it from Discord.
Okay, and then I don't have to download any extensions or anything.
Yep. So what do
Okay,
you pull that
so
up?
the general concept here is that if you are long TSLY, so you own shares of TSLY, and you short the correct magnitude of TSLL, their moves will cancel each other out.
Oh, okay. So you
And,
preserve the
and
principal.
you preserve the principal. And then
Yeah.
every month you just get to collect a dividend. And then maybe once a week you rebalance. So like say every Wednesday you come in, you pull up the calculator, it tells you what the ratios are supposed to be, and then
Hmm.
you'll sell off like 1 or 2% of one of the positions and then move it to the other position. And then the next week you'll sell off 1 or 2% of whichever one is overvalued and move it to the cheaper one again. And you do this, 52 times a year. And so over the course of the year, your position essentially never goes down. Yet you
How
collect
many
dividends
times a year?
as often as you want. I'm planning on doing it once a week, like every Wednesday.
Okay, yeah, I thought you said 50 times a year. Yeah.
I mean, you could whatever. There's some short weeks you can skip weeks. It kind of really doesn't matter. But so there is one scenario where they fall out of parity with each other, and that's when Tesla goes above the share price of the calls that Tesla sold. So this position will lose value under one circumstance, and you can hedge that away if you buy Tesla calls.
Hmm.
So if you're long TSLY and short TSLL, and then you buy like one Tesla call for every so many thousand shares of Tesla you own, the position can never lose that.
Interesting. Did you paste a spreadsheet in Discord?
Yeah, I put it in the general chat, so you can pull up that spreadsheet and then switch to sharing your screen instead of mine, and then I
Okay.
can I can show you what the spreadsheet, like how it works and stuff.
Okay. Um, I'm looking for it. Maybe I have to refresh my screen here.
Oh, hang on. Did I post it to the? Yep, I posted it to the wrong Discord. Hang on a second. I'm in multiple Discords. I just
Yeah.
showed all the high tide bulls my Tesla balance thing. I'm sure they don't care.
I
There it is.
joined I joined Ethan's Discord. I didn't
Hmm.
join Khmer's, but I know he's in mine.
Yeah, I probably am going to join Khmer's at some point. I haven't. I've only watched a couple of his videos, and I haven't really sat down to join for like one of his Thursday night sessions or something. But I'm busy every Sunday night until like 9 or 10 because I play Dungeons and Dragons.
Oh yeah.
It's fun. I've been playing with the same group for about 20 years now.
Oh wow.
It's one of the core reasons I don't want to move out of the valley.
Yeah. So they call it the valley where you live too.
Yeah, yeah, that's the short answer.
There's a lot
So
of
what?
places called the valley, like in California. Like there's a ton of places
Yeah.
called the valley.
Well, so I live in a community where there's two city centers about 15 minutes drive apart, and it's a total population of about 200,000. But
Oh, okay.
as soon as you leave the Parkersburg Marietta area, it's just trees and cornfields for like an hour
Hmm.
and a half drive in all directions. So to get out of the valley, you have to go to a whole nother state, or you move to the middle of absolutely
Oh, okay.
national park, national forest, like middle of nowhere. Okay, so go ahead and switch over to sharing your screen if you could pull it up in the Discord.
All right. Let's see here. Oh. Oh, you sent. Can you paste an image of it by chance?
An
Because I'm gonna
image of
open
it.
it in Excel,
Oh,
but
sure,
I
sure,
can't
sure,
share
sure.
Excel either.
Oh, I see, I see. Let me clip
Yeah.
it and then I'll show you just the image here.
Okay. Or you can paste it into Google Sheets, and that works too.
Yeah, I don't trust Google. It's a
Yeah,
long
I
story.
understand. Yeah.
So I have to minimize like everything. Found it. Okay, there is a picture of it.
Okay. All right. Let's see.
Oh shoot, I again posted it to the wrong Discord. Those high tide bulls are gonna wonder what I'm doing talking about talking about TSLL on their
Which
Discord.
what's the theme of that one?
It's the other Discords. It's all high tide. It's single ticker. There's like 50 investors. We own like 10% of the float.
Oh, okay.
We're all bulls because we believe in the business model.
Mm-hmm.
I guess I can sell it until you got the picture in your Discord there.
Let me see, so I use a MacBook, but I don't know. Do you use Apple at all?
No, just for my phone. I have an iPhone, and then everything else is PC.
Yeah, I have an iPhone too, but I got a MacBook like in 2020, and it's just not as good as I need it to be. It's the bandwidth gets smoked up very easy. Because I tried to open your Excel file, and it started like running like because the bandwidth is getting used up just for an Excel file. Now I'm trying to go back to Discord here, and it's slow.
Do I need to like unshare or something?
That shouldn't affect it, but because when I share, it'll take over.
Okay. I don't need to like stop sharing. So I guess I can look at this on multiple time frames here since we still have the screen up. Is it going to change when I click?
Okay, I have this here. I'm going to share it now.
Sure.
Yep. So then I'll present, and then this will take the screen here. All right, here we go. Okay, so I see an image of so the spreadsheet. You've got start date June 24th, end date today.
Yeah. So that spreadsheet is set up to automatically change the date to one date is today's date, and the other day is like 80 days ago or 70 days ago or something. I don't remember.
Oh, you're doing like statistical analysis on this.
Yeah, the entire thing.
Nice.
Yeah, the entire sheet is automated, so that you just have to change the letters TSLY and TSLA or whatever, and it will go find the data for those tickers and then fill the sheet with it.
Is it a macro?
No, yeah. You have to type it into the equation line at the top of Excel. I learned this off of YouTube. I learned like half of what I know off of YouTube. It's rather shocking.
Awesome. It's funny. Some other part of my story here. Like I've paid for trading courses, and I've learned more for free, honestly.
Yeah, absolutely. Yeah. You just have to be willing to do the work and put in the sweat to like go find the good people to talk to.
Yep.
Okay, so those are the closing prices for those two tickers, and then it compares the returns for the two tickers, and then it compares the excess returns versus the average returns. And all of this so that you can calculate the variance. And then off to the right, you'll see a variance and a covariance matrix, and all of that gets multiplied together so that you can calculate the weightings. And so what you end up doing is when you're in Excel, you'll go up to data and you'll try to optimize the variance Excel that box. So right there it's 0.678. In order to actually use the calculator, you click on that box and click minimize, and it will minimize that. In order to do that, it'll find the right readings.
Okay.
So right now it's showing that for every $1,000 you own in TSLY, you would have to short Tesla by $915 to have equal magnitude in the movements. So this is a TSLY comparison, and it's actually not a very attractive one because you have to take on such a large short position. $915 is huge. Some of the other ones I was looking at were more like $200.
Interesting.
So I can post another one. Let me grab a different one. Let me grab TSLL. Let's see. It says it's already open. Apparently I need to change the ticker.
Oh, I'm able to open this in the browser. I can actually show a bigger version of this now.
Oh, excellent.
Yeah. I'm really learning Discord myself. Like this is the first year I've really used it.
I've used Discord for about 5 years now, and I still don't know. I still don't know very much about how to use it.
I've got to learn, and I know you've mentioned this before, like monetizing it.
Yeah. I would love to eventually get into a format where I can just teach people how to trade and teach people how to invest.
Yeah.
and get paid to do that.
That's
Because I
what I
enjoy
want to do
teaching.
too. Actually,
Yeah.
I want to run my own stuff, and I'm not going to rip people off. I'll charge reasonable prices.
So that's actually the whole reason why I'm attracted to you is because this entire finance world is full of snake oil salesmen,
It
and
is.
I got zero used car salesman vibes from you.
Yeah.
So
Well,
I mean
I've
that's a
been
good
burned
sign.
by salespeople myself, and
Yeah, yeah,
so as far as money, I'm really good with managing money, but getting screwed every now and then by a salesperson
yeah.
offsets a little bit of the good management of money.
Right. It's usually to the point that I just insist that they send me something in the mail, so I
Yeah.
can look over the numbers like without a salesperson giving me some pitch. And
Yeah.
'cause that's the last thing you want to hear is some demon talking to me, and
Right.
Angel over here. No, no, ignore all that. Just look at the numbers. If they look good, do it. If they don't, never get back to them.
Well, I feel like they sense when somebody's uncertain and they feed off of that.
Yeah, yeah.
Yeah, like they
Well,
know.
I spent 2 weeks as a telemarketer, and I still have a couple of friends that I made there, and those people are some of the best salesmen you'll ever come across
Yeah.
because they have to talk you into buying something that you don't want, usually during dinner time or while you're trying to watch TV,
Hmm.
and they're somehow successful.
Yeah. Yeah. All right. So let me share this now. Okay, here we go. So this is going to be a full screen version of this, and we can even zoom in too. We can zoom in. We can zoom out. So this will be good because who is it
Okay,
here?
so you are in Excel, right? You're just not showing the picture, or are you on the picture?
I'm showing the no, I'm not in Excel. I'm actually
You're not in
showing
Excel.
the
Okay.
picture full screen.
Okay. If you were in Excel, I was going to walk you through how to use the data command to minimize the variance. But if you're just showing the picture, I'll just talk about
Maybe
it.
you can just type that in the Discord later.
I can totally type that into the Discord so that people understand what's going on. So just to go through this again, it tracks the closing price every day, and then it tracks the returns for that day and the excess returns, and then it compares the two of them in a matrix, and then it multiplies that matrix against another matrix, and then you can end up producing a variance. And all of this is based off of an equation that I had to go look up. I didn't just like invent this myself or something. Some really smart statistician invented this in the
Hmm.
60s or 70s. It's been a while. This is not brand new stuff.
I did this in my classes. I've forgotten some
Yeah,
of it.
yeah. I have learned and forgotten so many things from my classes. I have over 400 credit hours.
Oh, really?
Yeah, I have 6 degrees, and
Nice.
miraculously, I somehow have less than $10,000 in student loans left.
That's awesome.
Miraculously, yeah.
I
When
actually,
the
technically, I have five,
yeah, yeah, when the
three
pandemic
undergrads and two masters.
broke out, I got rid of my mortgage and paid down all of my debts except for my student loans. And
That's
now I feel
awesome.
like I feel like I'm starting over because my brokerage account is tiny, and it's like I'm like 22 again, and I have like nothing in my brokerage account.
Oh, you
So
liquidated it to pay off your
yeah,
house?
I own my house now, so I don't have a mortgage payment, and my student loans are down to it's like 8 or 9 grand or something. It's no longer a stressful situation. So
That's
I
good.
yeah, well, I knew interest rates were rising because like I pay attention to the Fed and macroeconomics, and as soon as the rates started rising, I was like, I tried to get my dad to sell his brokerage account. At the first week of January in 2022, I'm like, Dad, everything's going down. He's like, What are you talking about? You can't predict the future. I'm like, Dad, the Fed just told everyone we're going to force it down. You need
Hmm.
to sell. And he's like, You can't predict the future. No one can. And I'm like, I'm not predicting the future. I'm listening to Jerome Powell. He's telling the whole fucking world, you need to sell now. And he
Yep.
wouldn't sell. And then I watched my inheritance shrink by 30%.
At least you're certain that it's your inheritance. I don't have that
Well,
luxury,
I have siblings, so I don't get to keep it all or anything.
but you
And
get a fair share of it.
well, they could theoretically outlive their savings, but he's pretty frugal. So my parents are probably not going to outlive their savings.
Yeah. It's funny because my parents, the mentality is like and I don't know, they might watch this, but like with Disney stock, okay, for an example, like Disney had doubled for them at some point. We didn't sell, but now it's down, and I hear
hmm
more about that than when it was doubled, you know?
hmm
Yeah.
Yeah, well, Monish Fabrai, have you ever heard of him? So he talks about he runs a fund, and his investors in his fund, there's like 400 investors. They all have like $2.5 million or more in with him. They
Yeah.
never call him unless he's down. It's amazing how they talk about they won't call him for a year and a half, and then all of a sudden the market's crashing. He gets like 300 phone calls in a day.
Wow.
Okay, so do you have anything else you wanted to talk about? Did you want to talk about hedging more? Did you want to talk about JPMorgan? Why I will never invest in the bank stocks? That's probably a good speech we can have.
Yeah, tell us about that. So
So,
one thing I can say before you get into that. So um I almost want to say we because I work there, but like they always beat earnings. Like
yeah.
every quarter they would beat. And it's funny because my coworkers thought I was a genius at one point, and all I did was it was just remembering the pattern. I was like, well, we
Mhm.
missed this quarter. So next quarter, what's going to happen? The analysts are going to predict it lower, and we're going to beat earnings, and it's going to exceed. So it's going to be what I call an earnings blast.
Oh,
And then it happened, and then everybody was like, "Wow, you called it," but I just knew the pattern.
there's a pattern. Yeah.
Yeah.
So with banking stocks, as I'm sure many of you realized this last spring, they can be ran on. They don't have hard assets. Almost all of their value is faith and loans. And right now, with interest rates really high, the bonds that they bought a couple of years ago are worth a lot less than they were when they bought them. And the loans that they handed out are not producing as much inflows as the bonds as they mature. So since the beginning of the Fed raising rates, the banks have been hurting for cash. And as soon as people started pulling money out of the banks, then now they're underwater on all of their cash situation. And the only way that they can fix it is to take out loans from other banks. And as soon as it was super clear that Silicon Valley Bank was underwater on its assets and everyone was pulling their money out, you ended up with a bank run. They are not the
Interesting.
only bank under this stress. Every bank is under this stress. All of them. I would not put any money in banks until the Fed started lowering rates. And then I would think about buying banks. But until then, I wouldn't touch them. They're under too much stress right now. And they don't have hard assets except for faith. I mean, the buildings, right? And, but they don't have like name brand association is everything for a bank. And as soon as that is even remotely tarnished, it's
Hmm.
almost impossible to get it back. So as soon as there's a run on a bank, um, it's really hard to recoup that, and it could take a whole generation before the sentiment on a bank changes. Uh, in fact, I had to quit day trading because of the banking crisis. So with day trading and scalping and stuff, I will step in and trade every day for like a month or two, and then I'll have a bad 3 or 4 days, and then I'll step away from the markets.
Hmm.
And I had such a bad 2 weeks because of the banking crisis that I had to step away from the markets. I just walked back in like 3 weeks ago. I started posting stuff in the Discord that I'm getting back into day trading again. And mostly it's an emotional problem. So I've studied all the technicals. I understand all the technicals. I understand multiple forms of technical analysis and everything. And it's down to the point that my last barrier is my emotions and the psychology. So I've since around last November, I've been like working on trading psychology and adopting a casino mindset and making sure that I'm not going to get mentally damaged by my trades. It's very important that you're emotionally stable if you're trading and investing. As soon as you get the heebie-jeebies or the fear, if the fear grips you, you start making horrible decisions. The
Hmm.
other thing to avoid is euphoria. So when you are euphoric, you are unable to see risk.
Yeah.
I just want to make sure this sinks in. When you get the biggest paycheck of your life for the next day or two is not a good time to make an investment.
I can relate to that because I've had some good options wins, and I'm like,
Yeah,
oh, this is gonna
yeah.
keep going. Like
No.
2021, I'm like, yep, this is gonna keep going, and then next one, 100% loss.
Yeah, yeah.
Yep,
So going into the banking thing, I see. It's always a game to me. I'm a competitive person. I like to compete with myself.
yep.
So a month before the banking crisis, I decided, oh, I'm going to start scalping options again on the SPY, and I took $100 and I turned it into 1,000 in about 2 weeks. Basically, what I'm doing in your Discord, you're seeing me like I'm gaining like $50 a day or $14 a day.
Hmm.
And then the banking crisis hits, and all of the market internals went haywire, and I started getting lied to by my indicators. And 2 weeks of that, and I was just so emotionally beat up that I just bought shares of other things and walked away from day trading.
Hmm.
So all the advice I'm giving out in the Discord and everything, I don't want your audience to think that I think I'm perfect or flawless or anything.
Oh, for sure, yeah.
Because I've made a lot of mistakes and I still make mistakes, and this whole
Hmm.
thing is a learning process.
Oh, I'm behind on a lot of this. I'm looking at the options trades subthread, and I see you posted like how to calculate some
Yeah.
like yeah fundamentals of it. I've used this app before actually.
Oh, the optionsprofitcalculator.com.
Yeah.
I like it because it doesn't show the option profits sideways. Almost all, when you look at an option strategy, they show everything sideways, and it's a nightmare. And I would prefer to look at it end on with time on the left instead of the way that they present their options, like the
Hmm.
profit loss diagrams on all those. Optionsprofitcalculator.com does a fantastic job.
Yep. There was actually an options trading group. Well, I'm still in it, but the person they had like their own formula for picking options, and it was basically lesser known companies that would have an earnings beat, and then they would trade off of the earnings beat, which I know most options traders say not to do, but this worked for a while. But the last year or so, the track record's been like less than 50%. So,
So after an earnings beat, they would usually gap a market up, and that is the absolute last time you want to buy shares. It's a little complicated as to why, but a gap up is a signal for retail to come by, and retail will come flowing in, and they will blindly start buying.
mhm.
And the market makers and stock promoters just sell shares. That's all they do. They refer to this as feeding the ducks. So they'll gap a market up, and then retail will come flow in, and they'll buy overpriced shares. And the market makers will see that it's overpriced, and they'll start shorting into this because that's their job. That's literally their job. You go to buy shares that don't exist. The market maker's job is to be there and short shares to you, so that
Mhm.
shares do exist. Their job is to make the market. So then the whales who gapped it up, they'll start walking the price down. And at the bottom, the market makers will cover their short position, and the whales will sometimes walk away and wait till the next day to start feeding shares in the market, but sometimes they'll continue for the entire day and drive it down. If they're proper villains, they won't push the price down very hard, and they'll do most of their selling on dark pools.
Mhm.
If they're inexperienced, they'll just do it all on the open market, and they'll force the price back down. There's actually a whole book on how to do all this that was written before dark pools existed. Jesse Livermore, Reminiscence of a Stock Operator. He went from being a dirt poor farm kid to the richest man on the planet, and then he had to declare bankruptcy, and then he became the richest man on the planet again.
Wow. Can you type
Yeah,
in that book title in the
yeah.
chat?
Whoa, I just stopped my
Great.
camera. Sorry,
Oh, that's good.
my keyboard is murderous.
Yeah.
Yeah, reminiscences of a stock operator. So he got so good at destroying people that we had to form the SEC. If you look up the history of the SEC and like their charter and why they were formed, it was to stop. Thank you. You found the title. It
Mhm.
was to stop stock market manipulation, and this guy was so good at manipulating mass psychology of crowds, that this is the playbook that whales and investment banks use to produce liquidity and move markets.
Interesting.
So this was he actually wrote 2 books. I have a copy of the second book in hardback or in paperback right behind me.
Oh yeah.
So this is the book that they sold to the masses.
Hmm.
This is what most retail refers to as technical analysis. This is all candlestick charts. It's all momentum. And if you're really, really diligent and really, really tight on risk, you can make money using this. Okay, but the other book he wrote is how to exploit everybody who's using these rules. So he wrote 2 sets of rules. One is for retail to get exploited, and the other one is for whales to exploit retail. How to move markets, how to force short squeezes, how to find stops and hunt for stops. All of the dirty things that you've ever heard market makers do, market makers don't actually do those.
Hmm.
Whales do that. Investment banks do that. JPMorgan does that. I don't do that because I don't have enough money. But if you hand me $10 million, I can grab a company with like $100 million market cap, and I can force a short squeeze and get a few extra $1 million out of it for myself. So you can lock up the float and buy up all the shares over a few weeks, and
Nice.
then you can lock up all the market makers' floats. Meaning the market makers every morning they'll throw shares out of the market to produce the market.
Hmm.
If you buy all of both sides of their shares, they'll have to keep buying shares, and you can grab control of the market from the market makers and force the price up.
Wow.
So, well, that's only if you have enough money. So this is something whales can do. This is something JP Morgan can do. I keep naming them because they're known for doing it. So is BlackRock and stuff like that. If you can get a hold of the float and control enough of the float, you can tie up how much float is available, and then all of a sudden, any amount of buying that comes in will drive the price up. And once the price goes up, then you start feathering all of those shares out into the market. What a lot of people don't realize is what happens on the way back down. I know every single one of you wonders what's going to happen when my investment goes down. And I'll tell you what happens. The first thing that happens is the shorts cover because they're wanting to remove risk from the table. And everyone else, like if you want to buy that, that's buying a falling knife. So you're buying an uncertain amount of risk. You don't know how much further it's going to go down, right?
Hmm.
But the shorts, for them, from their point of view, you're taking risk off the table by buying. So the very first time, so I'm going to hold my hand up here. The first time it goes down and then back up again, that's shorts covering. That is not a signal to get in. That is actually a good time to think about shorting for the rest of the way down.
Hmm.
So Jesse Livermore perfected this method where he would buy up the float, he would get a news event to force the price up, he would feather shares into the market, and then instead of it going down, he would take a huge short position right before it went down and he would go delta neutral so he doesn't lose money on the way down. And he would let it go about halfway down and he would cover his entire huge short position. That would force the share price back up and he'd start feathering his long position back out into retail. So
Interesting.
he perfected a method where he could just take like, I don't know, $3 or $4 million and he could get like 15 million out of it in like 6 months.
Wow.
Yeah.
I've got to
And
plug in my charger, but keep talking.
okay, so he got so good at this that mere rumors that he was going to work a stock would force the price up. Similar to how I was talking about bank runs, if you can get the public terrified that a bank is going to go under, they will pull all of their money out and they will go out of their way and they will short it. The opposite 100 years ago, if a rumor got out that this guy was going to do a deal or do a short squeeze, then people would just come blindly buying.
Mm.
He was like the Michael Burry of his day. He shorted the 1907 San Francisco crash with so
Oh
much
wow.
money. Yeah, with an enormous amount of money. He heard on the telegram that San Francisco got hit by an earthquake, and he didn't know how bad it was. No one knew how bad it was. But on the sheer act of the news arriving, he shorted all of the West Coast railroads. And then a
Wow.
week later, the actual news of how bad the earthquake was, and it was real bad, he made a huge amount of money. During the 29 crash, JP Morgan, not the business, the individual, JP Morgan had to call Jesse up on the phone and was like, "Can you please stop shorting the markets? Please." And
Wow.
it took a personal plead from JP Morgan to get Jesse Livermore to let the markets go back up. Because
Wow.
remember, he was the richest man on the planet, and he made most of his money by shorting.
I'm surprised that JP Morgan lost control like that, because it seems like, just knowing his history, like he had a lot of control of the markets.
There, on more than one occasion, JP Morgan called up Jesse Livermore and asked him to help him get out of the position. Meaning JP Morgan would buy like $100 million worth of shares, and then a year or two later, it's trading like 80% of what he bought it for, and he wants out for not a loss. And
Hmm.
he would call up Jesse Livermore and say, "I'll give you like 10% of the profits if you can get me out for any profit at all." And he would hand control, like physical control of the shares to Jesse Livermore, and then Jesse would run it through a bunch of different brokers. He would fake a bull run. So when okay, this book technical analysis,
Hmm.
what do you look for bull runs? You look for the price going up every day, and you look for the volume going up every day. So he would call on the first day, he would call up two brokers and say, "I want to buy 20,000 shares in one broker. I want to sell 20,000 shares in the other broker." He just put 40,000 shares worth of volume on that stock, and he's not out any money. So the
Wow.
next day, he calls up four brokers and is doing 80,000 shares and walks the price up further. The next day, he calls up eight brokers. None of these brokers know what's going on. They don't know this is one person forcing the price up.
Hmm.
So he just doubles volume every single day and wall walking the price up, and retail thinks the bull run is real. So they come flowing into the markets. So he would just
Hmm.
fake bull runs, and people would come buy them. And so he got so good, we as a government had to form the SEC. That is why we formed it. One man, one person, that good. And
Wow.
this is also the playbook that there. It's like almost illegal to use most of the things in this playbook, but the banks do it. Many of the extremely dirty things that most retail people complain about market makers doing, it's out of this book. It's not the market makers. They're just here to provide liquidity. It's the whales. The whales
Hmm.
want your shares. The whales are hitting your stocks. The whales are squeezing you out. It's not the market makers. Does anybody have any questions about my rant?
A lot of information there. I'll have
Yeah,
to listen again and take notes.
it's just a huge number of people misunderstand how markets work because they were sold this lie, and we're all sold it. It's you don't know what you're doing. These financial people don't know what they're doing. It's just disgusting that we're all told growing up from a small child, you yourself will never be successful in the stock market. Like my father telling me, "You'll never beat the professionals." And I'm like, "I already am. By the way, go look me up on tip ranks. I am definitely beating the market and I'm beating the professionals. And I
Tip
just
ends.
tip ranks,
Oh, tip
tip
ranks.
ranks.
Yeah.
Yeah, now that I'm writing articles on Seeking Alpha, I'm actually ranked against most of the rest of the analysts in the world,
Hmm.
and I still can't get my dad to listen to me.
My dad knows I'm right, but he's like very conservative. He's used to CDs and stuff like that. And
Yeah,
I
yeah,
told him, I'm like, if you just look at the S&P 500 over the last 12 years, you look at what it's averaged,
yeah.
and it's so much more than what you're going to get from CDs and stuff like that.
So he puts most of his money into VOO, which is very similar to just buying the stock. It's
Yeah.
almost identical.
Hmm.
They have basically identical performance.
Yep.
Oh, they want to know how to use the sheet.
Yes. Yeah, that's what
So
we
if
were talking about.
yeah, so I'm going to pull up my copy of it. So if you see the sheet, you can change the tickers. If you go to column B and C3, or I guess I should name them cells. Cell B3 and cell C3. You can
Okay.
change
Let
the
me start the
tickers.
share again.
Yeah, because you can take this sheet and choose whatever tickers you want. Like if you want to take on a pairs trade or whatever, but you will have to change the math of the I column depending if you're shorting or not. What is excess returns? Okay, Hoffman. So let me show you the math. Actually, it's the difference from the average. So if you, yeah, the excess returns column is the difference from the average.
That's alpha, right?
That's daily alpha, yeah. I mean,
Yeah.
but that's only alpha versus itself. That's not alpha versus the rest of the market.
Mm-hmm. Yeah. All right. So I have an image of this up. So what should I focus on?
Okay, so if any of you want to use this on other tickers, so you can replace the TSLY and the TSLA tickers, and it should automatically populate the data below. You might have to hit enter or click a couple times or whatever if you want to change the tickers.
Okay.
The other thing is, if you notice the TSLA column in the returns has the parentheses short.
Mm-hmm.
The TSLY column next to it, it's so in order to calculate returns, I'm subtracting the next day from today. And if you're calculating a short position, you have to swap that. So it's like yesterday versus today. You see what I'm saying? Because
Mm-hmm.
one of them, the returns are positive, and the other one, you have to force the inverse of the returns. So for the E column, right, that has TSLY, and you're long on that side, it's tomorrow minus today. If you want to take on a long position in TSLA, you would have to change the math for that column, like if you go to the equation bar, and you'd have to change that to tomorrow minus today. And then that would give you the appropriate returns values. That'll give you the right positives and negatives. And then everything else should get carried through, meaning that's the only thing you'd have to change if you're going to go long on two assets or short on two assets. If you want to go short on two assets, you'd have to change the TSLY column, that's the E column, to today minus tomorrow.
Mm-hmm.
I hope I'm not confusing or leaving you guys out. Oh yeah, THB, you want to wrap up? I see how it is.
No, I'm responding to comments too.
Mm-hmm, mm-hmm. I'm looking over and catching comments occasionally.
Yeah. I was going to ask you what you thought about that. So you were talking about the SPY.
Yeah.
So I've done options trades in leveraged ETFs.
Yeah.
I know it's really risky, but if you time it right, it's like really hitting the jackpot.
Yeah. So as long as you realize that options have asymmetrical risk reward profiles, and I'm sure that
Mm-hmm.
you do because you've been options trading for how long have you been options trading? I think you said 3 or 4 years now.
Yeah, about consistently 2.5 years.
Okay. Okay.
Yeah.
So they definitely have asymmetrical payout rates, and if you can adopt an attitude where you're willing to take losers, they have the option of producing winners that vastly outweigh the losers. Meaning like you might only have a 50% success rate, but on your losers, maybe you lose 90% of the initial investment, but on your
But the
winners,
winners are so much
yeah,
better. Yeah.
yeah, you might triple it or something,
Well,
and your
you've
net
probably
your
heard
net
my
results.
favorite NVDY story.
Oh yeah, you sold too early and then it ripped.
I would have made like 100,000 if I
Yeah,
kept it. Yeah.
yeah, yeah.
Yep.
I was in the AMC short squeeze
Mm-hmm.
when I was rather new to trading. I've been investing a long time, but I really wasn't into trading until around the GameStop short squeeze, and then I was like, man, I have to learn this extra aspect of markets. If I'm really going to retire early, I need to
Yeah.
know everything. So the AMC short squeeze, I was up like 300% in a day and a half or something like
Mm-hmm.
that, and I didn't sell. I was like, it's going to keep going. There's 4 million people all trying to push it higher. The craze on this is too large. And at the time, I wasn't into volume profile. So I was only using momentum indicators, and all of those were lagging. So I want to make sure all of you hear this. RSI is a lagging indicator. MACD is a lagging indicator. They do not tell you the future. The best they will ever do is tell you the present.
Mm-hmm.
So if you can use TA, it's really good for telling you what the weather's like, but I can't tell you what the weather's going to be like an hour from now. All I can
Yeah.
do is look out the window, open the curtain, and say, it's raining. That's it. That's
Mm-hmm.
all TA can tell you. And so people like to use RSI and MACD as if they were predictive. And not only are they not predictive, they're lagging.
Mm-hmm.
In fact, when I trade, I mentioned I trade the SPY. I specifically trade the SPY for a reason is because you can actually look at the market internals for the SPY. So have you ever heard of the tick and the trend?
Mm-hmm.
So if you go to my technical analysis section, I was showing what I use for TA, and it is different from what the rest of the world uses.
Mm-hmm.
If you go to the post I made on 9/7/2023,
Let's see.
uh,
Under the
and
general or what?
if you click on technical analysis,
Oh, yeah.
yeah,
That's an
I
area I
just
need to improve on for sure.
right. I use a form of technical analysis that most people have never even heard of,
Mm-hmm.
and that's just because it's really obscure. So I'm a
Oh, I see
value
now.
investor.
Yeah.
Yeah. So there's 9 different charts. Pull that one up. I want to talk about
Yeah.
that one for a
I'll
minute.
share this screen here. All
So
right.
I'm a value investor, which means that I have to find out what intrinsic value is before I'm willing to buy a company.
Mm-hmm.
And very frequently, the market price is different from the intrinsic value. And if it's lower than the intrinsic value, it's a good time to buy. If it's higher than the intrinsic value, you don't touch it. And that's why, like, I won't touch JPMorgan right now. They have negative cash flow, and long-term EPS is negative, and
Mm-hmm.
discounted cash flow says that they're only worth like $70. So I wouldn't do that. Okay, so here's these charts.
I
You will see
see these
candlestick.
are Thinkorswim
Yeah,
screen
yeah.
snips. Yeah.
I'm only able to look at all of this on one screen in Thinkorswim. My other 2 brokerage softwares, they don't show the trend very well. They don't show the ad, and they don't
Mm-hmm.
show the middle box on the right. The That's volume profile. This is the only software that I can find that's free that'll show me volume profile.
Yeah.
So volume profile will show you what fair value is for the day. So if you see the green bar and the pink bar on the box on the middle right, that's today's fair value. So if you ever want to know, like, I'm going to dollar cost average into a position, well, what's a good price? Well, you can look at fair value right there and try to buy below it.
Mm-hmm.
You just have to be able to see what fair value is, and volume profile will show you what today's fair value is. So if you're going to dollar cost average into a position or sell out of a position, this will show you where you should be trying to sell above or trying to sell below. Yeah, the point of control. Hoffman, you are on it. I'm so glad there's at least one other person on here who knows what I'm
He's
talking
a
about.
very smart guy.
Yeah, I keep asking if Hoffman will come on so that I can find out more about his backstory and his journey and what he knows.
Yeah, I want to have him on. A lot of you I've wanted to have on for a while.
Yeah. So right below that is the second most powerful indicator that I use. That is the dollar. Everything in the market is based off of the dollar. So if the dollar goes up, markets go down. And if the dollar is crashing, markets rip. So I pay more attention to the dollar than anything else when I'm trading the SPY because it'll move the SPY. Apple will barely move the SPY. Tesla will barely move the SPY. All those. The
So
dollar
when
will
the
move the
dollar's
SPY.
crashing, the market rips.
Yes, when the dollar's going down, right? Okay, think about it like this: when the value of the dollar is going down, it takes more dollars to buy a company.
True. Yeah.
The value of the company hasn't changed, but the value of the dollar is changing, right? So it's always a fraction.
Mm-hmm.
So right next to that, I have the VIX because the VIX is important for telling how much fear there is in the market. To the left of that, I have the ad. So this is the total number of companies that are positive in the S&P 500. So you can see how many of them are positive and how many of them are negative at any given time. Right above that, I have the up volume versus the down volume for the entire S&P 500 index. So if there are more whales on more different tickers all selling, then it'll drag the entire SPY down. The same with the box above that. That's the TRIN. It's also sometimes called the ARMS index, and you can use that as a measure for momentum and the strength of the momentum. When the TRIN index goes really hard one way or really hard the other, markets move large. Like you get a big move up or a big move down.
There's a
And
question
then,
here.
yeah, I'll do questions.
What time
What
frame?
time?
Yeah.
So, okay, so most people are probably going to hate me for this, but I trade on 1 minute candlesticks. And I also simultaneously am looking at 5 minute candlesticks and 4-hour candlesticks. And the VIX is daily, but the dollar is 1 minute because very small moves. Yeah, I know Hoffman says, ouch. Yeah. Very small moves in the dollar translate to significant moves on the SPY. So most people are not willing to do this kind of trading. Like I'll sit down when the market opens and I'll sit here for like an hour and not touch anything, just stare, watch the market. I'll wait for structure to set up. I'll see if I can figure out where market maker inventory is going. And then all of a sudden, the dollar will start moving really hard in the other direction, and it'll be very clear that I should buy an option. And then it's just hurry up and buy something. And then I wait maybe 5 minutes, and then I sell. And that's
Nice.
I'm just scalping. Like if you look on this page, you can see I'm making between $14 and $50 a day on this. And I started 2 weeks ago. I started with $50, and the whole point of this exercise was just to try to prove to your Discord that technical analysis works. And it's been 2.5 weeks, and that $50 is now $132.
Oh, nice.
So what kind of annual returns am I seeing scalping? Way better. I'm beating the market by a lot. I'm just only doing it on a really small scale so that I have zero emotion. If I was to try to do this with my entire life savings, I would get emotionally just devastated. Every time I took a tiny loss. And so that's actually where I'm at, is I'm extremely profitable. I just need to get comfortable with taking big losses, or I'm never going to get over the emotional hurdle that I need to make huge money.
For me, like I could be a lot better at this, I feel like, but I'm just pulled in a lot of directions, my job and stuff like that. And I'm almost ready to take the leap and to just do this full time.
Yeah,
But
yeah.
there's something keeping me like, I'm like, oh, no, I'll keep working for
Well,
now.
so I think I heard you say that you made more than $2,000 a month in dividends. So you're basically at lean fire or barista fire,
I'm moving
depending
up
on.
the fire totem pole.
Yeah, yeah.
Yeah.
My next goal is to get to lean fire, and then I can just relieve a lot of stress. I can write fewer articles. I can teach less. I really enjoy teaching, but I'd rather spend more time with my wife.
Yeah.
Like I'd rather enjoy life than have
Right.
to work so much. I am 40. I promised myself I would retire by 50.
Nice.
So
Yeah.
I have to hit that fire by 50, or I'm going to be pissed.
Yeah. I mean, so the whole thing, the dividends are almost producing a decent income for me,
Yeah,
but
yeah.
I just am not sure if it's sustainable. That's my thing.
So I've said this many times in the Discord. If you're specifically like, let's hone in on just TSLY, because it's easy to just talk about a single ticker. I expect the long-term NAV erosion, if you don't hedge it, I expect it to go down by like 30% a year, maybe only 25%. And then it pays an average of about 50% a year. So the net returns is something like 25% a year, and it's cash, and it pays bills, and that's a huge advantage over just owning Tesla. The
Right.
ability to just pay bills, and that money's coming.
Right.
So, are you happy with your 2,000 or whatever dollars slowly shrinking by like 25% a year over the long-term holding of the position? If you do a discounted cash flow on that, I think it pays itself off in like 2.5 years or something like that. And then it's just pure money. But the amount that it pays you every year should slowly go down with the NAV as the NAV slowly erodes.
So say that again, it pays itself off when you're doing all these hedges and stuff like that?
So no, even without hedges, merely holding it, it should pay itself off in like 2.5 years, because it pays 50% per year and it goes down.
Oh, I see what you're saying. And then it's like the house's money after that.
Yeah, and then it's
Yeah.
free money. You've already gotten your money back out of it, and then it's going to pay you the rest of your life. However, it's going to pay you slightly less every year than the year before it.
But in 2 years, it will have paid for itself.
It will have paid itself off. Yeah. So it depending on how you look at it, it's a fantastic investment.
What about the idea if you can buy yourself a little bit of time and you just dollar cost average down?
Yeah. So what Jay keeps recommending is that you turn on the drip and try to like re-drip some of your dividends back in.
Yeah.
And if you like, let's say instead of accepting 25% a year in cash, let's say you drip like 15% of that back in. Well, I'm telling you, it only erodes by like 25% a year. And if you're dripping back in 15, well, now it only erodes at like 10% a year. And if you drip at the right times, like if you drip at bottoms, you can actually get that 10% advantage. Especially if you're also doing things like selling covered calls on TSLY. The great thing about being involved in a fund that pretty much always goes down is you can just sell like calls with a year and a half expiration on it, like at the money. Huge
That's
premium.
true.
Yeah,
Yeah.
you can collect just huge premium off of that, and then just wait, and then in another year and a half, when they all expire or whatever, do it again, because you know
You
that
don't
it's
think
going down.
you don't think it will run back up like it? So if Tesla goes on a run, do you think TSLY will run back up too?
So yes and no. So it depends on how Tesla behaves. So if Tesla like gradually goes up 5% a month, TSLY will definitely go with it, and it will be carried along. Like a rising tide lifts all boats.
Right.
But if every time Tesla rips hard, TSLY gets left behind, and then every time Tesla goes down, TSLY also participates in that down.
Like all of the down, but limited upside, it seems
Yeah,
like.
it's not quite all the down because you're still collecting that premium. So from a
Mhm.
returns point of view, you might only be getting like 85% of the down moves, but you're getting 100% of the up moves when they're shallow. It's just when they're violent, you're missing out on like half of the gains and stuff like that. So this
Yeah.
is why I keep talking about also buying Tesla calls. So the whole reason that you're missing out on gains is because they're capping their gains by selling calls. So you should be able to buy calls that are even higher in strike and deeper in time than the ones that they're selling. And every time they sell, you roll. And you just roll to a new position. And you collect. Every time it goes up, you'll be rolling for profits. And every time it goes down, you will have to dig into the dividend to buy more call. So this
Mhm.
hedge is not going to be free all the time. But I believe it should pay out way more than it costs. Because I'm assuming Tesla's going to go up. I'm a big fan of Tesla, $2,000 a share, but I think it's going to be a rough ride between now and then.
Yeah.
I'm a huge fan of the company long term. I totally think it's going to do fantastically. I have a lot of really positive things to say about their AI. So I just want to make sure this sinks in because you probably understand insurance more than most of the audience. At some point, they will prove that driverless vehicles are safer than regular human drivers.
Mhm.
They will prove this statistically. And then every business in the country that has a really large fleet will force their entire fleet onto automation. And then Tesla will start getting these permanent long-term cash flow contracts. And they are literally 10 years ahead of everybody else in driverless software. So they're going to collect huge fat stacks like 10 years from now from the entire rest of the industry. Ford, you can buy a Ford, it'll have Tesla software driving you around. You'll buy a Chrysler, it'll have Tesla software driving you around. All of those other
So
car companies.
Tesla, if you were to rewind 10 years and
Yeah.
fast forward 10 years, it could be like the same performance.
I think it's going to be a rough ride, but I for sure believe in Tesla's long-term prospects because it's not just those driverless automated cars. I'm sure you're aware that we're transitioning to more solar panels because right
Mhm.
now solar panels are dramatically cheaper than every other form of electricity. So if you want to build a new power plant and you look at the cost of just building more solar panels versus building like coal or natural gas or something, it's outrageous the difference in cost.
Mhm.
But solar panels have a problem where you can't do it on a really large scale without batteries. And batteries cost a lot of money. And right now, we have been hindered by the cost of lithium ion batteries. But I want you to start looking up this company and the entire audience. Okay, there's a private company you cannot invest in them. It's called Form Energy. In 2024,
FORM.
FORM. In 2024, they are building a factory that is going to start producing iron air batteries. And these things are 1/10 the cost of lithium ion. So they are going to absolutely change how our power grid is able to function. Because for the first time ever, we're actually going to have cheap, affordable grid scale batteries, and we can build really large solar panels.
Wow.
So the entire shoot, I lost my train of thought. I had it. Where did I start this rant at with the solar panels? Oh,
I ran a lot
Tesla.
too.
No. The whole point of this. As we install more and more of these batteries into the system, the cost of electricity in the middle of the day is virtually free. We actually have to turn off large-scale solar panels so they don't damage parts of the grid. If you look at the wholesale price of electricity throughout the day, it changes dramatically. And around dinner time, it's the most expensive. And from like 2 o'clock in the afternoon to 4 o'clock in the afternoon, it's basically free. It's cheap. It's like 0 cents per kilowatt hour.
Mhm.
So as soon as we include batteries into the system, Tesla is one of only 3 companies that has the AI capabilities to actually manage the arbitrage software that can pick up the electricity for free and then sell it back to the public at dinner time for outrageous profits. What are the returns on free electricity that you later sell for not zero? It's infinite returns.
Yeah.
So you just take those infinite returns and you divide by the maintenance costs, and all of a sudden it becomes super clear that the companies that are able to arbitrage electricity are going to be making fuckloads of money, like 10 years from now, 15 years from now, 20 years from now. There's only like 4 companies that have the capability to do this. There's AI, C3.ai, they can do it. Fluence Energy can do it. STEM can do it. Then there's a whole bunch of private companies that you cannot invest in, and then there's Tesla. And Tesla is also a car company. Tesla also has all this other stuff going for it, but they're overvalued and they don't make much money right now. And 90% of their revenue comes from low margin automobile manufacturing. So when am I going to invest in Tesla? As soon as they start switching on all these other high margin revenue streams that I know is in the works. I see it. I see.
Well, based on what you said, I mean, if you're looking at $2,000 Tesla and
oh
right
yeah, oh
now,
yeah,
yeah,
oh
it
yeah,
makes sense. So
yeah.
I think I said this, but I used my dividends last month to buy into Tesla finally.
Okay, okay,
Yeah.
yeah. I I doubt you will be kicking yourself 10 years from now. I
I want
really
to get
think
more. I want,
yeah,
so a lot of YouTubers that are around my age, like the difference between me and them is they got into Tesla at the right time and it made them like
yeah,
multimillionaires.
yeah.
Yeah.
So listen to this. In like 2009 or 2010, when I first started dating her, my wife had somebody mine 2 Bitcoin for her,
Yeah.
and then none of us knew how to use it. None of us knew how a wallet worked. None of us could transfer it. None of that. We lost it. It's gone.
Oh, wow.
Yeah. So, so, like a couple years ago, she's like, "How much is Bitcoin worth?" And I'm like, "I don't want to tell you, honey. I don't."
Yeah.
She paid like $50 or something for someone to mine 2 Bitcoin. And so
Wow.
her long-term thesis on it was like, "Yeah, this is worth basically nothing now. It'll probably be worth something later." And
Mhm.
I'm just kicking myself because that was a free house or something like that.
Yeah, that's like buying it close to the bottom.
Yeah, yeah. Well,
Yeah.
she's another person with a long term like outlook, like long time frame outlook. We're both gardeners. We both believe in making an investment now and seeing rewards months or years later. We
Yeah.
plant trees and stuff like that. So when she was we weren't actually, I don't even think we were dating yet, because I think we were just friends at the time. We hadn't actually become a couple. And she's like, "Can you help me with this Bitcoin thing?" And I'm like, "I have no clue how any of that works."
Hmm.
And I have missed out on so many of those investments. When I was 17, my father was like, "I'm going to put 3 grand in a Roth IRA for you. I need you to pick out what you wanted me to put it in." And I was like, "Okay, cool. I want it in Microsoft." And
Yeah.
he's like, "I can't let you do that." And I'm like, "Why not?" And he's like, "Because that's a single ticker." And I'm like, "So?" And he's like, you're supposed to choose an ETF or something. I can't let you put all of your money in one company." And I'm like, "But it's Microsoft." And now you're still understanding this perpetual argument that I've been having with my father for like 25 years now. When I was
Hmm.
15, he went out of his way and was like, "I signed you up for a macroeconomics class because so when I was a really little, I loved to play strategy games. It was one of my core tenets of life is I love to play strategy games. I love to break strategy games. So you
Hmm.
find what the rules are. You find out you don't break the rules, you break the game. So you play within the rules and you find unfair advantages and you lean into them. So he saw that I have as a hobby, I like to break games. So he had me take a macroeconomics class so that I could give him investment advice. And now he has spent the last 25 years ignoring that investment advice because it runs counter to everything he believes in, because he's a John Bogle investor. Are you familiar with John Bogle?
Yeah, I thought I saw a Bogle book behind you. It looked
There
like.
is a Bogle book right up there. It's a
Yeah.
wonderful book. I believe that it is, if you don't want to do the research on companies, if you don't want to read 10Ks, if you don't want to read earnings call transcripts, you want to read that book. And then you never want to research a company ever again, because you're just going to ETF invest after that. And
Hmm.
that is what my father is now. So he started off as a stock picker in the 70s, picking individual stocks, and he's been through multiple downturns. He's a iron hander, like diamond hander. He does not sell ever. unless it's not for macroeconomics reasons. If it's crashing, he'll just buy more. He
So
has
you
zero.
got exposed to markets at a young age then.
Oh, growing up. Oh yeah. Oh, yeah, from a very young age. Always.
I didn't really. So my family was more focused just on like they knew CDs and stuff like that.
Yeah.
That was pretty much it. I had to learn this pretty much all myself.
So my father was a podiatrist, and he would do 14-hour days, and then
Yeah.
come home and spend like 2 or 3 hours reading on Morningstar. And for me, it was always really irksome because that was when I would come home and want to play video games on the same computer.
Yeah.
And so very frequently, I would just sit there with him while he finished his research, and I'm waiting for my chance to finally play some video games. And
Yeah.
I just got hooked, just watching him talk about markets and reading articles and all that stuff. Eventually, like I refused to become one of those boring old ETF investors because I have a stock picker at heart. Because I believe in producing outsized alpha, as much as you can, as often as you can.
I'm that way too as far as being a big believer in stocks. I do ETFs.
Yeah.
Like my 401k is all in like ETFs and stuff like that. But like as my brokerage account and my IRA and stuff like that, I'm doing individual stocks a lot.
Yeah, I just if he had let me put $3,000 in Microsoft, then I
I
could
was gonna
just sell.
say,
Yeah, I could just sell
yeah,
it right now and buy TSLY, and I could just retire on fat fire right now. But
yeah,
he even taking the hit from pulling it out of the Roth
hmm,
because it's gone up by so much. And the reason he wouldn't do it, it wasn't just that he refused because it was a single ticker. I was unable to make a clear enough argument to him as to why it was going to continue to find 30% returns. Like I just wasn't able to form a coherent thesis. I wasn't able to tell him. I'm like, Dad, they don't have any overhead, zero overhead. When they go to ship out like Windows 14 or whatever, they have no overhead. So how many copies of the disk do you think they ship? Well, they ship one copy of the disk to the distributor, and then the distributor prints out like 8 million copies. So they don't even have to pay for the cost of the disks. They
hmm,
just pay for the cost of developing the software. And then they get to sell the software for like ever until it goes bad, or 4 years later they get you to buy some crap.
right.
So because they're software and because they're in inelastic demand, I was like, this is it. But I was unable to express that to him at the age of like 17
Yep.
because I didn't know what inelastic demand was.
Oh, I learned that in economics. That's
Yeah,
a great
yeah,
product to have when you have
it,
inelastic demand. Like
yeah. But
people are always going to buy it, no matter how much you raise the price to.
I couldn't express that to him, and so he couldn't see the same potential that I could see in Microsoft. Back in I think this was like 1998 or 1999 or something. It was right before the dot-com crash. So he
Hmm.
probably, like a year after making the purchase, he probably would have been like, see, told you so. But,
Yep.
if I'd have just diamond handed it for the last 25 years.
One of my
it,
favorite passages in the book, I did the audiobook for the 100
yeah,
Baggers. I don't know if I got to this point yet, but it's a story about Warren Buffett and
yeah,
how in the 70s, like there was a couple of years that he lost money.
yeah,
And if you didn't know anything about him then, like there's a story about how if a friend told you, "Hey, invest in stuff that this guy Warren Buffett does," and they would have been pissed because he was losing at the time, but then look at him like 5 years after that, and he was like one
yeah.
of the best investors ever.
So the thing with value investing is you have to have faith that it doesn't matter what the market price is, your calculation for intrinsic value is correct.
Hmm.
And you can stay patient longer than markets can stay irrational.
Hmm.
If you adopt that attitude like Warren Buffett does, like Charlie Munger does, like Peter Lynch does, then you can just hold on to a loser for like 3 or 4 years and not care because
Yeah.
the intrinsic value of the company just keeps going up, and eventually the market price will rubber band back up into it, and you'll make big gains. You just have to be patient. And it's a big part of why retail will sell a loser when they don't realize what's going on. And meanwhile, you have those value investors patiently down there buying at the bottom, dollar cost averaging an ever larger position,
Mm.
so that eventually this good company, that the market will realize it's a good company. And once it's recognized as a good company, the value will go up and they can sell.
Yeah.
Oh, to answer Hoffman's question, I do not know how to write in Python. I can write in machine code, I can write in binary, BCD, I can write in C++. I cannot write in Python. And I'm worried that if I learn Python, it'll screw up my ability to write in C++. So I'm probably just going to keep avoiding Python for the rest of my life.
You know
And
C++.
yeah, but I'm not very good at it. But I know it enough that if I try to learn yet another programming language, it would become a big mess.
How much of a programmer are you?
So I programmed my own UiPath software so that the articles that I write, there's like, I have software that scrapes the data off of the internet and then puts that data onto an Excel sheet for me. And I
Yeah.
haven't figured out the next step. I physically have to copy paste it from one Excel sheet to another Excel sheet because I can't figure out how to automate that.
Hmm.
The second Excel sheet has all of my charts and everything in it. Then I run a second UiPath program that scrapes data from that second Excel sheet and copy pastes all of the charts into about 600 Word document with all of the data filled in and everything. So the article writing process, I have about 40% of the articles just fully automated. Um,
Nice.
so how good of a programmer am I? Not very good. So so they taught us how to hunt and peck for variables to change them because I'm an engineer, not a programmer.
Hmm.
So I'm actually not very good at
Yeah.
it. But
Well,
I can do it.
yeah. Have you used like Chat GPT like for writing stuff?
So I played around with ChatGPT, and the very first time I submitted an article that had even just two paragraphs written by ChatGPT, the editor was like, "Yo, we can tell these exact two paragraphs were written by AI, and you have to change them. We can't
Really?
let you print this." Yeah, they have software that can detect if like whole sentences were written by ChatGPT. So if I was to try to go down that road, I would have to have ChatGPT write it for me. Then I would have to fact check it. Then I would have to change like all the synonyms to other synonyms and change some of the phrasing and grammar so it actually sounds like a human.
Interesting.
It's not worth it. I can type faster than that.
Yeah, yeah.
So I would love to hear you do a second part of Hundred Daggers. If you don't, I'm going to have to buy a copy of it.
Yeah.
Uh, there's about a dozen really good investing and trading books that would be worth it for you to do an audio recording of because they're not on YouTube.
You know,
You
it's
could do
funny because I tried to sit and read that book like as a whole. I've read parts of it, but I've told myself if I do an audiobook, it'll actually make me read it, you know?
yes, yes.
Um,
'Cause
but
then
it's taking so long. Like, so the first one was like what, an hour and a half for part one.
yeah,
I'm gonna get the other ones, but I was I had the crazy idea of reading it in like one sitting, and I'm like, no, this isn't gonna happen.
yeah, it's not going to happen. You're going to have to
Yeah,
get up and go to the bathroom. You need to eat lunch. Yeah.
yeah.
Breaking it up into hour and a half long segments is
Well,
probably
I
might even
tried
be
to.
too
It's
long.
funny if you could have seen the behind the scenes. Like I was sitting there holding the book, reading,
Hmm.
and then I needed to move, and then so I'm like moved during the audio recording, and then I was reading it again, and I'm like, I can only do this like for like an hour and a half at most.
Yeah, yeah.
Yeah,
And like I think you were saying, it was going to take 4 or 5 total videos to get the whole book read.
I think 4. I can get it done in 4.
Yeah.
Yeah,
Well, I am eager for parts 2 through 4.
yeah, that should come soon. And then, of course, my own book. And then someone asked me, "Will there be an audio of that?" I said, "Well, actually, I shouldn't say that because I need to make book sales."
Hmm.
You know?
Well, you might make basically the same amount of money from an audiobook, but I wouldn't post your book to YouTube because, yeah, you want to make book sales.
Yeah, yeah. Well, I did from part one. I made enough in ad revenue to cover the cost of the book, so that
Yeah,
was
oh,
good.
nice,
Yeah,
nice.
yeah. YouTube
You,
really doesn't pay much. I mean,
no, YouTube is really just good for free advertising and building an audience. It's not good for extracting money out of your audience.
that's what I'm working on. But I can definitely say I'm leaving money on the table as it
Yeah,
is.
yeah,
I've
for
got to
sure.
get other things going for sure.
I would love to see you monetize this Discord and set up Hoffman and I as gurus, and we can start handing out detailed advice on what people should or shouldn't be doing, or what kind of thinking framework people need to be having in order to
For
find
sure. I
long-term
mean, I
success.
could
Yeah.
do that now. I mean, like I say, you all are like unofficial, key participants or moderators anyway.
Well, I'm always looking for additional ways to earn passive income from home.
Yeah,
Multiple diverse revenue streams and stuff like that.
yeah.
Plus, I enjoy teaching. And I'm already spending like 6 hours a day, like reading and researching and stuff like that.
I was going
I
to
might as
ask
well.
you, so to teach, you can
Yeah.
teach a level below the degree. So if I have a master, so I could teach undergrad.
So okay, so that's complicated. Let me talk about my teaching history there. So in
Hmm.
2000, so when I got out of high school, I got into the film industry, and I spent like 8 or 9 years in the film industry. And I started off as a production assistant, just like fetching coffee. And
Interesting.
yeah, and like by the end, and then because I was interested in learning all of the jobs on the set, because I eventually knew that one of these jobs was going to be better than the rest, and I would want that job. Low
Hmm.
stress, whatever it was. I didn't know what it was, but I knew I would find what kind of set job I wanted if I just tried them all out. Well, about 2.5 years later, I had been fully trained on how to do literally everything on a movie set, from like holding a boom to like dealing with the camera and lens changes and setting up lights and dolly
Wow.
operations. And I didn't realize what I was doing to myself, but I had turned myself into what is called a P grip. And so then I spent 3 or 4 years getting paid slightly higher as a P grip, and then eventually I got asked to train a fresh crew from scratch. So these people show up, they don't know how to use the equipment, they don't know any industry vocabulary, they don't know anything. So if I was to hire these people and not train them, they would be a hazard on the movie set, and they would cost us money and slow us down. So I enjoyed my teaching experience so much that a couple years later, I found myself at taking classes at a local community college, and I mentioned to the local professors, "Yeah, I want to teach my retirement," thinking when I hit 50 and get fat fire, I want to teach for fun. I want to pass on my wisdom because I enjoy teaching. So fast forward to 2015, and three of my professors retired all in the same year without talking to each other. All three of them were like, "Hey, you need to hire this guy to replace me because I have so many degrees." And so the dean was like, "Who is this? I don't even know who this is." And then they're all like, "It's an alumni. He's a student who used to be here." And the dean was like, "We can't hire this guy. He doesn't have a bachelor's." So there's an exception to the rule where you need to have a degree above the degree that you have, or you need to have specialized knowledge that's hard to get otherwise.
Hmm.
So they were in a pinch. They just had three of their professors all retire in the same year, and all three of them put in my name. So they just had me come in for an interview, and I got in there, and the dean was actually friends with my mother like 20 years before this.
Oh, wow.
So as soon as I walked in the room, she was like, "Oh, I know who you are." So
Wow.
that went over pretty well, and I really enjoyed teaching, and so they let me teach. I had 5 associates and no bachelors, and they let me start teaching because I had 3 referrals and five at the time. I only had 5 degrees, and they were like, "You have to get a bachelor's if you're going to keep teaching here." And I was like, "Cool, I'll start on the bachelor's." So I got my bachelor's in 28 months, and I'm actually really proud of that. Really hard engineering bachelor's. About a third of the classes were really difficult. About a third of them were really easy. But I got a whole bachelor's in 28 months. And now, since then, the school has slowly shifted their standards higher. And the nursing program on one of the other wings is now offering a bachelor's nursing program.
Hmm.
So as soon as they shift the engineering wing to offering bachelor's, they're either going to tell me to get out or get a master's.
Oh,
And
wow.
I'm probably just going to quit teaching if that happens because, like, for engineers, it's really not useful for us to go get a master's or a doctorate. So our pay is based off of once you get a bachelor's and you go get certified, our pay is based off of experience and certifications. It is not based off of education after that.
Hmm.
So getting a master's would just be a huge bill that wouldn't increase my wages.
Right. Yeah, that wouldn't
So
make sense.
yeah, there's no sense for me to do that. So I don't really know what I'm going to do after that. I've always had no problem. I'm a bit of a polymath, so I can jump around from career to career pretty easily. It's not a big deal for me. So if I have to quit teaching, I don't know. Maybe I'll teach online. Maybe we'll draw in so many students that I'll just get paid full time as a guru. You know, I'll figure it out.
Well, I always joke that coaching is the fastest growing profession. Like I see,
It is.
dating coaches, life coaches, financial coaches,
Well,
all kinds.
so specifically, there's a really high demand for financial coaches right now because all the boomers are retiring,
Yep,
and most Americans are financially illiterate. And
it's
most of
true.
us have no clue what to do with our money or any of that. And I want to emphasize this: we're also not really willing to put forth the effort to learn what it takes to like be good with money.
I hear so many people say, I just don't want to think about money. I want
Exactly,
it there, but I
exactly.
just don't want to think about it.
Well, that person should just invest in the SPY.
Yeah. But what they do, I feel like those people end up getting ripped off by a
Yeah,
financial advisor or
yeah,
something.
yeah,
And I
yeah,
say, well, the paradox is to be to a point where you don't have to worry about money, you kind of have to get good at thinking about
yeah,
money, you
yeah.
know?
So
Yeah.
Charlie Munger always talks about how the first 100 grand is the hardest to make because you have to build a set of skills and knowledges just to get to 100 grand.
Yeah.
And once you get there, making more is easy because you already have the skills, you already have the right attitude, you know
Hmm.
what to do to make more. Getting there is really hard sometimes.
Yep. Well, good discussion. Glad to get you on finally.
Sure, sure. Yeah,
Yeah,
if you want to bring me on to talk about specific tickers and stuff, I can look them up ahead of time and try to figure out how to hedge them.
for sure. We can definitely probably have a recurring, um, podcast or something.
Heck yeah.
Yeah,
I should encourage you to try to set up like the same night every week or something for a rhythm.
I want to. My
I
work was crazy this past week.
Oh, I was meaning to ask you, are you involved in the insurance industry?
I'm
And
not.
your okay, well, your city just got hit by a hurricane, and I was like, man, if he's involved in insurance, he's got to be
Oh,
swamped.
it would be. Yeah. Yep.
Yeah.
When I
Okay.
worked for
Well,
financial advisors, we did sell life insurance and stuff like
yeah.
that. But I saw a lot of stuff that I learned everything. Like when I was like 20, I was interning for financial advisors and stuff, and I learned how the whole industry works then.
Mhm.
Yep.
Mhm. So when I talk of make rips on infinite banking, you know exactly what I'm talking about.
Yeah. Yep.
Yeah. But you should do a whole video on infinite banking. I
Hmm.
will thumbs up it big time.
Yeah.
I'm shocked at how many people look at that and don't realize they're just getting their own money handed back to them.
Hmm.
As far as I can tell, you're just taking a loan from yourself. I don't know. It's one day I'll figure it out, but until then, I'm just gonna stick to the stock market.
Well, like I've told like my parents, it's like they've done so much better not having an advisor, and it's like, well,
Yeah,
you've cut out the
yeah,
middleman, so now
exactly,
all your returns are going in your pocket instead of theirs.
exactly.
Yeah.
So most funds don't beat the market because of the advisor fees. In fact, the John Bogle thing, that is John Bogle's big breakthrough. Is he was the first person to really figure that out. That actively managed funds do not beat the market for the most part. The exception would be like Warren Buffett. So Warren Buffett, everyone else just takes 2% a year every year, no matter what. So
Hmm.
fund goes up, you take 2%. Fund goes down, you take 2%. Warren Buffett said, "No, I don't get anything unless you make 6% or more, and then I want to take a fourth of your gains after that."
Hmm.
So if you do the math on that, if you go up like 30%, Warren makes about like a bandit. He makes a lot of money.
Yeah.
But if you go down, Warren gets paid nothing. If you
Yep.
only make 5%, Warren gets paid nothing. So
Hmm.
that's actually the best deal you could ever sign up for as far as
Yeah.
active management is. You want them to be incentivized to actually earn you money and not just collect a paycheck and smoke cigars and whiskey and shit like all day long.
Yep. For sure.
Yeah, the active management fees plus that opens up mistakes. One thing that my dad always drilled into me why he buys ETFs and why you dollar cost average is every time you buy and sell, you're opening yourself up to making more mistakes. And if you're a trader, like I'm also a trader, every single decision is potentially a mistake. If
Hmm.
you're an investor, every single time you switch to a new investment or you think about buying or selling, you open yourself up to making a mistake.
Hmm.
And sometimes not making a decision is also a mistake. Just merely deciding to put something off, to not deal with it, also a
Yep.
mistake sometimes.
Yep. Well, anyway, like I said, really good discussion here.
For sure. I'll let you get going. I should probably wind down and go to bed soon.
Yeah, I'm gonna try to. I do want to do the like scheduled, like probably like Monday, Wednesday, Friday, or something like that.
Sure, sure.
Yeah.
Yeah, we can talk about what a schedule we can try to work around. I typically teach in the mornings, but this quarter they talked about maybe moving me to a night class.
Hmm.
So I'll probably know more about that in about 3 more weeks.
Oh
But
yeah.
until then, I'm not teaching right now for about 5 more weeks because I'm on break right now. My school they broke semesters into first 8 weeks and second weeks, and so they just gave me an 8 week vacation.
Oh,
So
nice,
yeah, I've been writing a lot extra. You know,
nice. Yeah, I could use an
yeah,
8 week vacation.
I know, right?
Yeah,
Yeah,
yeah.
well, my wife's ragging on me because I'm not getting the house fixed fast enough.
Oh yeah. Yep. But
All
yeah,
right.
that I am trying to do the fixed like live streams,
Oh yeah.
and
Oh
then
yeah.
yeah, we could pick a day. Sometimes like on one of those.
For sure.
Yeah,
Sounds good.
yeah. Awesome. Well, great having you on. Then
Yeah.
thanks a lot. Yeah. So
I'll
all
say
right. I
goodbye to
guess.
your audience.
Yeah. Yep. So, all right, you
Oh,
can drop if you want. I may just go
all
another
right,
minute, wrap it up, respond
sure.
to some comments. Yeah.
Well, I should at least figure out how to drop so that in the future I can control a little bit more about how the streaming goes nowadays.
Oh, I think what I can do, I can just remove you and
Oop,
then,
I think I found the button.
yeah.
Have a good night, THB.
All right, you too. Thanks a lot. All right, bye. All right, everyone. So that was a great discussion here. I just wanted to make it an even hour and 45 because I'm kind of OCD like that. So, all right, I'm gonna end it there. Thank you all for tuning in. Like, comment, and subscribe if you haven't already. Thanks again for watching all the way through, and we'll see you soon. All right, take care.